Hey everybody, welcome into the show. Welcome into real estate investing here on the channel. Good to see everyone. I'm Clayton Morris, the founder of Morris Invest. Hope everyone is doing well. Today is one of those rainy spring days where it's just like been raining all day. It's one of those days where you don't even like get out of the covers, you know. Today though, we are going to be talking about trying to build wealth through stocks and the difference between stocks and traditional real estate investing and some of the downfalls that I see associated with stock investing. I've been a stock investor for many years. I've lost a lot of money in stocks over the years. I've had retirement plans that just went totally upside down thanks to the craziness in the stock market. So we're going to talk about that on the show today. Some of the ins and outs of that. So we'll allow the YouTube alerts to pop up. Let me know where you guys are joining us from today. Hope everyone is doing well. You guys can hear me okay. We're going to start the show in a little bit here. Iris in Philadelphia, Philly in the house, represented. Enjoying lunch in Pennsylvania. What's for lunch in Pennsylvania? Chilly and rainy in Washington. Of course, it's always chilly and rainy in Washington. Does everyone have like seasonal mood disorder in Washington state if it's always raining and always cloudy out? I feel like that's how it would be in London too. Today's like a rare day. Usually it's really sunny here, but it's been this morning it was nice for a little while, and then it's just been pouring down rain most of the day. But we need it. We're in a drought here, so. Grand Prairie, Texas. Grand Prairie, Texas is at Jesus, name above. Jesus having chicken corn soup, Mike Owen says. Black bean burrito. Charlotte, North Carolina, good to see you. Prav. Flower Mound, Texas. I haven't had any lunch yet. I had a vegetable scramble this morning. That's about all I've had. So if you're just joining us, we are going to talk about stocks versus real estate investing on the show today. Certainly some interesting news coming out of Washington. What's been happening with the Federal Reserve. You've been watching what's been happening in the stock market. The bond market is just being destroyed right now, thanks to what Fed Chief Jerome Powell is planning to do by raising rates along with the Fed. Again, I don't mind some day trading. Like I definitely do some of that, but I do not. And there's some things that I hold long term, but most of the stuff that I have, I want performing for me. I want performing assets that are going to produce cash flow. That's what I want. Brian McCatton, nice to see you in beautiful downtown Newark, New Jersey. Beautiful downtown Newark. There's some good restaurants downtown Newark. How's the food scene kind of growing there in downtown Newark? That was not too far from where I used to live. I used to live up in Morris County. Start the show here in a few minutes. Just want to get all the alerts sent out. I am cold. Cold. Let's try to warm things up. Guess it doesn't help that I'm drinking ice water, does it? Yeah, a lot of really good Portuguese restaurants there. That's right. A lot of the Portuguese population. What was it? Don Pepe? What was the name of that? There's a couple that I've eaten down there in Newark. That there's also what's his name? The Top Chef who won Top Chef has a restaurant there. I went with a couple of our team members from Morris Invest. We went to have dinner there. Scott Samuelson, is that his name? Sam. Yeah, Don Pepe Fernando's. Yeah, but there's a restaurant. It was really good. The fried chicken he does. Looks like fried chicken was off the charts. And he won Top Chef. It's making me hungry thinking about fried chicken. Tonight's taco night. It's Taco Tuesday around the Morris house. Now we've got extended family here who knows how to cook some amazing Mexican food. So delicious, delicious tacos. Very excited about that. Elevating our taco experience. All right, all right, all right. Yeah, Marcus Samuelson is who I'm thinking of. Brian, have you been to Marcus Samuelson's restaurant in Newark? He won Top Chef. He is a great chef. Food is off the charts. Amazing. I don't know the name of the restaurant, though. I will look it up here. I want you to go. It's called Eater? No. No, that can't be it. Is it BP? Marcus BP. This might be it, actually. Sorry, I'm talking food here. We're gonna get the Marcus B and P. B and P. Yeah, ate there like 2 years ago. Oh, they have these chips that are off the charts. Ooh, he does a piri piri too, a Portuguese hot sauce. Huh? Is that the restaurant though? This can't be. Oh, this is just stuff he sells separately there. Menu. Let me look at the menu here. Oh, the deviled eggs. Everyone was telling us you got to try these deviled eggs. Everyone was telling us about this, so we did, and they were delicious. Delicious. The hot and honey. And the cornbread. They said the cornbread was delicious. And the crispy chicken with piri piri, coleslaw, and cheddar biscuit was off the charts. Anyway, if you go there, Brian, try it. You will thank me later. You will thank me later. This is not a food show, but it should be today. You need some like comfort food today. It's kind of all right. All right. Get this up. Ready to start? Let's start, shall we? Swig of Batman water. Okay. Welcome in to the Real Estate Investing Show. I'm Clayton Morris, founder of Morris Invest, which is a full-service rental real estate company. Now, when I first started my investing journey, I started out probably how most people do it. They listen to a traditional investing advice. They get a financial advisor, or even, you start a new job and you just get a stock account. You get a 401k, a retirement account. Now they're even making it automatic. So like if you get a job, at Home Depot, as soon as you get that job, boom, you have a 401k plan. You don't even have a choice. They just sign you up for the thing because they just think people are too stupid, right? They don't even want, and it's really, it helps them because of course those companies are making money off of it. The whole process stinks, right? But anyway, that's how most people do it. That's how I did it, set it and forget it. I'm going to be good to retirement. I'm just going to invest in the stock market, stock-based retirement accounts. Well, guess what? It really doesn't work because today I want to unpack the paradigm of wealth building through stocks, the idea of having a pile of money at the end of the rainbow rather than cash flow. As an alternative method for investing, I like to look at the self-directed IRA, and I'm going to share 5 major drawbacks today of investing in stocks and why using a self-directed IRA as opposed to those 401k options, in my opinion, is going to allow you to come out on top every time. Before we get into today's content, I want to mention, if you come over to our website, go to morrisinvest.com. It's a great website because we have tons of free content there for you to check out and explore. But while you're there, feel free to snoop around a little bit, see what we have to offer. Look at all of our blog posts. We've got a lot of great blog posts. You can get our freedom number cheat sheet, etc. But you can learn all about the self-directed account. You can learn about lowering your taxes, funding options, everything. We've got tons of great resources there. And if you'd like to book a free call with our team, jump on the phone with us for 30 minutes. We're happy to walk you through what we do at Morris Invest and help you kind of set up a plan for you, like your individualized action plan for you to start building wealth and building passive income. So we will do that for you for free. So book a call with us. Well, if you're unfamiliar with a self-directed IRA, let me give you a quick rundown of how this works. A self-directed IRA is a more flexible version of a traditional IRA. In a self-directed account, you can invest in a wide range of asset types like real estate. You can, invest in cryptocurrency if you want. You can invest in gold. You can invest in silver, a whole bunch more. Again, on my website, I have a full guide to self-directed IRAs. We're going to link it for you here in the description below. So if you want to read more about these types of accounts and how these things work, what the stipulations are, and how to decide if it's right for you, go ahead and click that link. Well, again, we'll have it in the show description. So with that being said, let's get into the 5 major drawbacks of investing in stocks as sort of the breadbasket of your retirement. And why instead I believe you should invest in a self-directed IRA instead. So let's start with number 1. Number 1, hidden fees. This is, again, if you go to the website feex.com, Feex, we'll have a link for you in the description. You're going to find out, just plug your information in, you'll find out so many hidden fees that you didn't even know about. Because when you invest in the stock market, you're going to be paying all kinds of additional fees. There are commissions, there are brokerage fees that can eat into your profit. But what I really dislike about these fees on the stock-based accounts is that they're sneaky. They hide so many items in these accounts that you wouldn't even know about. I prefer investing with a self-directed IRA because that's where you set up a one-time setup fee, very, very cheap, with the custodian that you pay. There's a bunch of different really good custodians, Provident, Alto IRA. They're really, really good. And you know exactly what you're going to pay. You can also know exactly when you can expect to pay transaction fees, when you wire money or you make a purchase. All of that information is upfront. It's not hidden. And the custodian isn't taking a percentage of your profit under the guise of brokerage fees. Again, it's buried deep in here. This is how these guys get away with it. And I'm surprised at this point that Congress hasn't passed a law. I shouldn't be surprised, right? Congress is in bed with Wall Street and all of these brokerage houses and all of these big banks, they're in cahoots. So I'm not surprised by it. But all of this stuff is hidden from the average American. In fact, your custodian that with a self-directed IRA is not allowed to give you financial advice. So you don't even have to worry about any ulterior motives under this custodian plan with a self-directed account. They're just there to move your money around according to your wishes. Like again, I have multiple self-directed IRA accounts. I think I have to check with my wife. I think we have Equity Trust. I have Alto IRA. Our team, we also partner with Provident. They do a great job. There's a couple. There's only a handful of them, to be honest with you. And they're very transparent. You can invest in whatever you want inside of that self-directed account. If you want to invest in stocks, you can. You can do it yourself, though, so you're not paying somebody else all of these exorbitant fees to do it for you. Thing is, when you have a Fidelity account or any of those Merrill Lynch accounts, all of those fees add up to big, big numbers. I was shocked. I was absolutely shocked when I found out how much I was paying in fees, both to my 401k and a separate IRA account. Now, I sat down with this financial advisor when I lived in Philadelphia a number of years ago. I didn't know what I was doing. I was fresh out of college, kind of just starting out in my career. I was making good money in the TV business. She basically was kind of like a shark in that way. Very nice, but kind of like a shark. And she set up my IRA account, and she encouraged me to go for some larger package plan. And going through the details, I couldn't find the fees. Going through all of the paperwork, I couldn't find out how I was being fleeced. It wasn't until we had to partner with a separate financial team member that actually was able to figure out and find out for me how much I was actually paying. $15,000 or $16,000 a year in fees on this one account. And I didn't know about it. So I canceled her, got rid of it, and I moved it into a self-directed account. Now I control my own destiny. Number 2 on my list, volatility and risk when you're in the stock market. Now, the stock market can be erratic, right? Just look overnight. What's going on in the bond market right now? The mood swings. This morning, Tesla is up simply because Elon Musk tweeted about the Gigafactory in Berlin. Look what's happening in the bond market, though. If you went to safe havens like bonds, right? You think, I'm good to go. Government bonds are a safe place. Until yesterday, we hear from Jerome Powell, who says that he's ready to even have a bigger increase in interest rates by the not just March, but into May. And the bond market collapses overnight. So the stock prices can swing based on any number of different variables that are totally outside of your control. I like to use this analogy. I remember a number of years ago, I don't know if it was Britney Spears or somebody was I think it was Britney Spears. Maybe it was Nicole Simpson or something. I don't even know. Or Jessica Simpson, not Nicole Simpson, was a spokesperson for one of those beverage companies, And that person did something stupid or controversial in the press. It was the paparazzi did something, and I don't know, Britney cut off all her hair or something, whatever it did. Because Britney Spears as a spokesperson for Pepsi or Coke, then Coke's stock dove as a result of it, because she did something crazy in the press. What does that have to do with the value of the company? Well, everything, because now suddenly the sentiment is that, Coke is not worth as much because Britney Spears cut off her hair. Do you want your retirement tied to that? I mean, that's the craziness of this process, right? And so everything from politics to current events can make stock prices tank or take off, explode and then tank the next, like a pump and dump, explode and then dump. And if you don't have the tolerance for this kind of risk, I mean, you could be sitting there one afternoon and Tesla goes up $100 and you don't even know about it. And you wished you would have maybe sold it and made some money on it, but you didn't even know about it because that's not what you do, right? You're not a day trader. So then you're sitting there and it went up 100 points and then it drops 100 and you didn't know about it. And now it's back down and now you're sitting there. Wouldn't you have loved to sell it? But you didn't. And that's the way these plans work. If you don't have the tolerance for this kind of risk, it can be a big punch in the stomach. I don't know about you, but I certainly don't want Wall Street or Congress or the CEO of Coca-Cola to have the ability to impact my family's future. This is why I prefer buying real estate within a self-directed IRA. It means I have a real tangible asset that isn't going to lose value in an afternoon. Yes, the real estate market can have its ups and downs. But if you make a smart investment, you're not going to see much variability in your rental income. Again, the rental property itself, yes, maybe it'll go up, 20,000. Maybe it'll go down 10,000, depending on what market you're in. But who cares at the end of the day when the rent stays consistent? Again, passive monthly income from your rental income every month. Number 3 on my list, no control or freedom. Now think about it like this. When you invest in the stock market, you have very little control in what's happening with your accounts, especially if you're investing through a 401k or an IRA. And as a shareholder, remember, you get paid last. What a ripoff. Because like if a company is collapsing, the shareholders in a stock are not going to be paid first. The board will be paid first, not you. So it is absolutely possible that you could actually have an account that goes down to $0 in value. That's happened to a lot of investors who jumped into some of these Chinese company stocks, right? Some of these Chinese companies IPO'd, had an initial public offering, kind of spike, do a little pump, and then dump and then disappear and go out of business or get taken off exchanges. And guess what? If you invested in those companies, zero now, zero, gone. When I invest in my self-directed IRA account, I get to choose the asset, and I'm collecting monthly rent directly into that account. There's no money grabber middleman. If you're looking for more control of your retirement or more freedom to invest, I can't recommend a self-directed IRA enough. It's your money, it's your retirement, and my philosophy is you should have some discretion over it, if not total discretion over your retirement. Number 4, as it relates to stocks, let's talk about the difficulty and the difficulty and its barrier to entry. Now, this is very, very important. I read a book a number of years ago by Jim Cramer. You can love him or hate him, but at the time I loved him. And I think he still has a lot of really intelligent things to say over on CNBC. But a number of years ago, he wrote a book, and I read it, I think it might have been college or just after college, where he said, never invest in a company with a stock unless you can devote at least 10 hours a week to studying that company. Wow. Think about that for a second, right? Like if you plan to invest or buy stocks on your own, there's a ton of research involved. You're going to need to spend a lot of time studying financial statements, annual reports, the market conditions, profit and loss, or profit and P&E. You're going to need to know what this company looks like, what their financials look like. Where are they investing? Are they acquiring any companies? How much money, how much debt do they have? How much, debt does a company have? How many shares of the stock are floating right now? What's available? How is their year-over-year growth? All of those pieces. What kind of technology are they building right now? Like I literally see whole investment channels devoted to one stock. Like there'll be like one guy who just covers Tesla. That's it. Like that's his one stock that he's investing in. You have your retirement tied to one stock? Like Tesla? Like Elon one day tweets? Or something bad. Like he tweeted a few months ago about how this big order with Hertz wasn't even finalized and the stock tanked as a result of it. Then a few days later, he tweets about something else and it takes off and then it tanks again. It goes, you can do a lot of research on a company, but when you have the volatility associated with that, to have your whole retirement built into that is a huge mistake. But, should you choose to invest in a self-directed IRA, the account can be set up in minutes and you can actually listen to us. I mean, our team of at Morris Invest can help educate you on these options for free. So if you come over to our website and you book a call with us, we can walk you through that process for free. When you set up a call with us, we'll be happy to do that. Very, very easy to do. Number 5 on my list is a lack of streams of income. So when you're investing in stocks, you don't have that consistent cash flow. Now, you have some dividends, of course, depending on certain stocks, but for most of the time, you're not, and you're also going to be paying capital gains on those dividends. You also don't get the tax benefits in the same way that you would with owning real estate. So a stock-based account can provide just one stream of income. But when you buy real estate in a self-directed IRA, you're essentially getting 3 streams of income. You get the cash flow, then you get the appreciation of that asset, and you get the principal reduction. Think about that for a second. 3 streams of income. The cash flow from the property, from the tenant, the value of that asset appreciating, okay, which you could even pull out that equity in that property and use that to buy an additional asset. So you're getting the appreciation on your balance sheet. And if you've got tenants in that property and you bought that asset with leverage, then of course the tenant is paying down the mortgage and you're getting a principal reduction. So you're building up equity in the property. Not to mention your wealth is growing tax-free because it's in a self-directed IRA account. There are no capital gains taxes, no dividend taxes. And as long as you don't tap into your funds before retirement age in a self-directed account, withdrawals are tax-free and penalty-free in a Roth self-directed account. You know, if I had more time today, I could keep going and I could list out 50 more reasons why a self-directed IRA is superior in my opinion, but I think 5 is a good place to stop. You know, if your interest is piqued at all, be sure to watch my full video that I have on the power of self-directed IRA for building wealth. We will link that up. And as always, feel free to reach out to us if you have any questions or any concerns at all. We're happy to answer them for you. Again, just go to our website, go to morrisinvest.com and see this big red book a call button right there. You can't miss it. Click on that. And then what will happen is a calendar will pop up and you just put in your email, your phone number, and pick a time, a 30-minute time slot that works for you. And we will give you a call at that time. Make it very, very easy for you to get started in real estate investing. So that's my distinction between stock investing and real estate investing. I'd love to hear your comments in the section below. Weigh in on this. Do you like stocks? Do you prefer real estate investing? What are some of the things holding you back from this? Let me know in the chat below. I'd love to hear your thoughts on that. All right, let's open it up for some Q&A here. Any questions coming in? I'd love to hear what you have to say about that. Naza Sanchez says, I listen to your podcast, but first time listening live. I love it. Thank you for all the knowledge you share. Hey, thank you so much, Naza. I appreciate it. Am I saying that right, Naza? Lindsay H says, that's a lot of hours. Yeah, meaning like studying stocks, right? So again, as Jim Cramer says, studying stocks for 10 hours, at least a week. The only company I would even feel confident in like putting looks like we had a little freeze up. We had a little freeze up here with all the rain, and must be this massive storm that we have here today. Sorry about that, guys. So, hey, if we freeze up and I can't come back, we'll have to cut the question and answer session short here. But hopefully, we'll see if the stream is stable enough for us to continue for a few more minutes. Hey, Janet. Good to see you. I am back. So anybody have any questions specifically about real estate investing, stock investing, broader economic questions? Let me know as we look at what's going to happen here with the Fed. Yeah, we're seeing this huge rout in the treasuries right now. Huge rout thanks to these interest rate hikes that are coming. I mean, again, if you've got, that's the thing. Put my money in treasuries, right? Because that's a safe haven, right? U.S. treasuries, that's a safe haven. Until it's not. Until, until suddenly the Fed decides that they're going to increase rates 7 times this year. So all of that banking on U.S. Treasuries being a safe haven goes right out the window. So again, U.S. equities gaining this afternoon. Brent futures are also, Brent crude oil, also an absolute mess right now. Janet says, I'm interested in stock investing. Yeah, I mean, I don't do, very, very little stock investing, except for some day trading. So again, and I use some of that short-term capital just to invest in real estate. So it's not something where I want my future tied to the stock market. Just a little bit of quick capital, making a few $100s here, a few $100s there, doing some day trades, understanding, because that you really don't need to know the fundamentals of a company. That's not, fundamentals go out the window when you're day trading. That's not important really at all. Some people could argue that it is. I don't believe it is at all. You're really just looking at the price action. That's it. So you happen to be sitting there by your computer and you have 5 computer screens up and you want to do day trading and you're there watching and Elon Musk tweets about something and then Tesla stock jumps for 5 minutes. Great. If you bought it here, you could sell it here. You could make a little bit of money in between. Great. You have to be really good at that though, because you could lose your ass very, very quickly. I have a buddy who was a day trader, swing trader, day trader. He kind of held some stuff overnight, whatever. He told me that actually one of our clients, I'm sorry, I was thinking I actually have 2 people that did this, very similar situation, but one of our clients at Morris Invest was in real estate, was in trading, and ended up made a trade, and by the time his flight landed, he had lost 6 figures, and it was absolutely devastating for him. So he wanted something way more stable and consistent with real estate. And I feel for him because I have another friend who did that same thing happened, and his wife divorced him as a result of it. I mean, because he was doing some stock trading, day trading, and just he lost his shirt. Let's see here. Okay, let's see. Let me go through a couple of these here. Jennifer Cooper says, originally I began studying stocks, but then I got interested in real estate. So now I've been putting those hours into how to buy more real estate. Yeah, and the beauty is you don't need to study a particular company for 10 hours a week like you do if you're investing in stocks, right? You understand the fundamentals of real estate investing. You buy a performing asset and you set it and forget it. You buy it, you have it managed by a team, and it cash flows. You don't need to be studying that house for 10 hours a week. Continue to educate yourself financially and how to add additional funding and how to grow your portfolio. But that's the beauty. You don't need to be reading their PDFs and their financials of a company and studying every day. Let me just pull up an example here. So let's just go to, I just did a search, here's Tesla stock today, right? So you want to buy 1 share of Tesla, it's $9.43. But then let's just go through all of the news today. 1 hour ago, 1 day ago, 6 hours ago, 3 hours ago. All of these pieces of news surrounding Tesla over the past 24 hours. Again, that's what I'm talking about, where you've got to study these particular companies and really keep focused on, okay, what is the market cap? What does the historical data look like? What is the earnings per share? What is earnings coming up? What's happening with all of these different pieces? And then you have whole analysts who are sitting there devoted to just studying one company's movements and price action and what are they doing? No, thank you. No, thank you. With real estate investing, you get a much more stable environment where you're not given to the wills of the market and crazy news cycles. So smart move, Jennifer. Let's see, Mike. Mike Martins. Real estate prices have risen dramatically in my area. I feel priced out of my local market. Any advice on exploring other areas or suggestions on how to compete in a rising market? Well, Mike, we have on our channel here, we've got a whole bunch of videos on buying out of your backyard, because chances are you don't live in one of the best rental markets in the country. Where we build our properties are specifically researched for years before we buy raw land and build brand new construction rental properties in the best school districts in certain best states that are real estate and landlord friendly. So we have full videos on that, Mike. I would suggest here on the channel, just go through those videos. That would be my suggestion, because, if you're priced out of your local market, it doesn't make sense. And also, there could be a whole variety of reasons why you shouldn't invest in your particular market. Higher crime. It could be, not a diversity of jobs, might not be the best school districts. Like what do the local zoning laws look like? Is your state even landlord friendly? Like, what are the landlord laws in your state, your city, your county, all of those things. So there's so many factors that go into that. So I would suggest check out those videos, Mike. Hope that helps. Let's see here. Yeah, Jennifer, thank you for sharing that. So 2 videos ago mentioned buying outside of your backyard. Exactly. Let's see here. Oswaldo says, I've heard of self-directed IRAs, but still very new to it. Can you transfer or roll over an IRA to a self-directed IRA? How does the initial setup fee work? Yes, it does. You can absolutely do that. That's what I did, is moved my my IRA over to my self-directed IRA. I had an IRA that was sitting there for years. It had like 28,000 in it or something like that. And it was in this, the account wasn't doing anything, wasn't making me any money at all. And then I rolled it over into a self-directed account and was able to start investing in real estate. So, Oswaldo, if you want some help with that, our team, we can jump on the phone with you. We can have it set up for you for free. On our side, like, we will set it up for free. And the custodian that we work with, I believe we work with Provident. Our team works with Provident, which is an IRA, self-directed IRA custodian. But there's plenty of other self-directed providers out there. And again, very low fees, usually like 1 fee per year. And it's very transparent. So it's all kind of upfront. They'll show you exactly what they charge. It could be like a couple $100 to set it up one time and you're done. So again, different strokes for different folks. But Oswaldo, if you want to book a call with us, we're happy to go to morrisinvest.com. Haley on our team can set up your self-directed account in like 10 minutes for free. She'll take care of it and do it for you for free. She's great. So feel free to take advantage of our team. That's why we're here. That is why we're here. Naza Sanchez says, I took out my HELOC out of I took a HELOC out on 2 of my properties to invest in more, all because I learned from you. Much love to you. Thank you so much. That's awesome. Way to take action. See, yeah, that's good on you, because so many people will listen, they'll hear our show, they'll watch live, they'll be a part of it, and then they won't take action. So many of you who are here today have taken action. Mike, Jennifer, Iris, Janet, Naza. Sorry if I don't mention your name. It's not because I'm just scrolling through here. Like Oswaldo, he or she is gonna set up their self-directed account. So now you can move over your IRA into a self-directed account. So awesome for taking action on that. Let's see what else is happening here in the old marketplace. Oh yeah, stock's moving up a little bit now, thanks to, it's like every day you got to be like, what's happening with the portfolio today, And I don't know about you, but that's not where I want to be. No, thank you. Yeah, it's up. Okay, it's up a little bit today. Now we're looking at the 10-year note. We're looking at the 10-year Treasury note. Okay, it's up a little bit in bonds after getting slammed because he made a comment. That doesn't happen. Fortunately, that doesn't happen in real estate investing. Jerome Powell can talk about anything he wants, but it's not going to affect the value and cash flow from my real estate assets. Like suddenly my tenants are going to stop paying rent because Jerome Powell spoke and changed an interest rate. It's not going to happen. Now, yeah, it could make it more difficult for you to get a loan, or the interest rate could go up, certainly on mortgages. That will happen, but that's why you shop around for better mortgage rates, because just because the 10-year Treasury note goes up, or the 10-year benchmark rate goes up, doesn't necessarily mean that your mortgage rates have to go up. They move eventually in concert with some of these fees, but it's not a set in stone thing that happens. Janet had a question about how much to contribute monthly with a self-directed IRA. Again, I'm not a financial advisor. There is a cap. Nicole, do you guys know off the top of your head in the chat what the 2022 rate is for a self-directed account? Yes, you can also roll over your TSP, Mike. Yeah, into a self-directed. Exactly. I think it was what, 17,000 is the yearly amount that you can do right now for a self-directed account, or a 401k contribution in a retirement account per year, I think, or it might be 17.5. I'm not sure off the top of my head. I should know this, but they switch it every year, and then they increased it a little bit during COVID, and there was like some, they kind of loosened some restrictions, and they may have placed it back in place again, but I think it's yearly contribution limit, SDIRA, it should be, 7,000, 17,000. Yeah, so if you are, the annual contribution limit for a self-directed is $6,000 for those of you who are under 50. If you're 50 or above, you can go up to 7,000. And that applies to all IRA accounts. Yes. Yeah. So it is still 6,000 for 2022. Yes. All right, everyone. Well, thank you all for the great questions here. I really, really appreciate it. We do have a special Financial Freedom Academy live event. If you are in our Financial Freedom Academy, you know who you are. It's our private Financial Freedom Academy that is coming up on Thursday of this week. It's a live stream. It's our mentoring session. Natalie and I will be in there with our Financial Freedom Academy members. And it's a great time. So we'll have all of your questions answered. So if you're a member of the Financial Freedom Academy, we will see you on Thursday. Just bringing up the website here. Here we go. In the Financial Freedom Academy. Again, it's a private group, a private Facebook group, and then private live stream for our channel members, or for our Financial Freedom Academy members. We'll be doing a special mentoring session, answering your questions during that special session on Thursday. So if you are a member, I will see you on Thursday afternoon. Natalie and I will both see you on Thursday afternoon. We're looking forward to it. Until then, everyone, if you're not a part of the Financial Freedom Academy, then we'll see you back here next week live on Tuesday at noon Eastern Time. Much love to all of you. Stay safe out there. Stay warm. Hopefully it's not pouring down rain where you are. And Naza, great to have you here. Naza said, thank you. I'll be attending more often. Great. Glad to see new faces here. So welcome, welcome, welcome. We will see you next week, everyone. Be good to everyone. Be good to everyone. Be good to yourself. Just be kind. You know how it is. See you, everyone.